Hello, everybody. Mark from Landmark Financial Services Group. This is the second in our series of videos on the PPP forgiveness portion of the loan. As I said earlier, there was some guidance that came out on Monday that talked about, and I actually provided a forgiveness application that we're going to put on our website that helped identify some of the things that the SBA is thinking about in terms of what's forgivable. Today, I wanted to share with you a moment, this here. Again, this is an outline that I've created. We're going to put this on our website. Today, we're going to talk about costs that are not payroll related. Remember that you have to spend up to 75% of the PPP loan on payroll related costs. And that's what we covered in the previous video. And just as a reminder, that's where you talked about the different pay periods and then the various costs that are included in that. Okay. The next part is the 25% can be used to pay for non-payroll costs. What are those costs? Let's walk through those together. The first is interest on covered mortgage obligations. So this could be interest on the mortgage on real or personal property. Remember that only the interest is, only the payment of the interest is forgivable, not the principal of the loan. And the loan has to be, had to be in place on or before February 15th of 2020. The second is rent, and it's the same basic concept as the mortgage, which means that you have to have a lease agreement executed on or before February 15th, 2020. And this lease agreement can be for real property, so like office space, or it could be personal property, so it could be equipment. So those lease payments are included in the forgivable portion. Utility payments, this is also another great one because it really identified what is the SBA is considering a utility payment. It's the classics like electricity, gas, and water. We knew that, but transportation is one of them. That I thought was kind of interesting. And telephone is in there, as well as internet access. These are all considered utilities. So payments of those expenses for agreements put in place before Feb 15 of 2020 are all going to be part of the forgivable portion of the loan. That is, of course, making sure all other portions are met. Now, what it does talk about here is an eligible non-payroll cost must be paid during the covered period or incurred during the covered period and paid on or before the next billing date. What does that mean? So you get for example, let's say you have a loan that 8 weeks ends on June 15th, but your electricity bill doesn't come until June 20th, okay? Well, you've incurred expense up through June 15th. You're not going to pay it until sometime after June 20. So this is saying as long as you pay the bill after, in the next billing cycle, then the electricity used through June 15th would be part of the forgivable portion of the loan. And again, just make sure that when you're doing your calculations, you don't count the same cost twice, because that's possible. You just got to be careful. And remember that it can't exceed more than 25% of the total amount of the loan forgivable portion. So if you have any questions about this, please always reach out to us. We're happy to answer any questions. And you can always find us at www.lmfsg.com, or you can email anyone here in the office. We'll be happy to help. Okay, I think that's going to finish this video. We got 2 more to go.